All right, good afternoon, everybody, and welcome to the latest Urban Living webinar. And today we are going to be looking at one of the hottest sectors of the real estate market at the moment, and that is the purpose-built student accommodation sector. My name's George Sell. I'm editor of Urban Living News, and we are an online B2B platform for the hospitality and real estate industries. Today's webinar is going to last around an hour. We'd like to make it very interactive, so if you have any questions for our superb panelists, then please do submit them using either the chat or the Q&A function in Zoom. We'll either answer them at the time or save 5 or 10 minutes at the end of the session. And a recording of the webinar will be sent via email to everybody who was registered. So the Urban Living webinar series is sponsored by IMS. And we are just going to watch a short video to find out some more about them. So thank you to IMS for sponsoring. If you'd like to find out more about IMS or get in touch with them, you can see their contact details in the chat. There will be quite a lot of information posted in the chat during this session, and we're going to leave a couple of minutes at the end for you to take any notes that you might want to take from there when we get to the end of the session at 3. So let's crack on and meet our panelists today. I'm going to ask them all to introduce themselves quickly, and we'll go from left to right as we see them on the screen. So first of all, Mandisa, welcome to you.
Good afternoon, everybody. So my name is Mandisa Khabo, and I work for a business called Greystar, based in the UK, though our parent company is American. My role within the business is Technical Development Director, and that covers being the gatekeeper for our operations team when we take handover from our development and construction colleagues, looking at areas such as fire safety, CCTV access control, making sure that those systems that we get from our teams in those buildings can be handed over seamlessly to our operations team and they can run with it. And we do this both in student accommodation, build to rent, and in the co-living sector. So that is me in a nutshell within Greystar.
Excellent. Thanks, Mandisa. Craig, good afternoon to you.
Good afternoon, George, and hello, everybody. Thank you, George, for inviting me today. It's a number of times I've spoken on these panels for you. Always very interesting and insightful. I thought I'd found a quiet part of the office to sit in, but clearly not from what's going on behind me. But I'm the Strategy and Business Development Director at Fresh. Fresh are a leading third-party operator of residential for rent accommodation across the PBSA, build-to-rent and co-living sectors. We currently manage circa 23,000 beds across 69 schemes with about 26 different clients, ranging from individual assets through to large institutional investor portfolios.
Great stuff. Thank you, Craig. And finally, James, good afternoon to you.
Good afternoon, everyone. My name's James Cumpson. I'm a senior analyst at the Watkin Jones Group, and we are a UK-focused residential for rent developer, focusing on build-to-rent, PBSA, and co-living. So we've been focused on PBSA for the last 20 years, and I think we're one of the largest deliverers of stock in the UK with over 50,000 beds. We're a full life cycle developer, so we'll buy land, we'll take it through planning, build it out ourselves, and then operate it through our sister company Fresh. And my role specifically, I sit within our IDP team, which is investment development and planning, which is all to do with acquiring land and taking the sites through planning. Excellent.
Thank you, James. So before we get stuck into the agenda, I just wanted to give the conversation some context and show a few screen grabs from our Urban Living News website and also from some other publications, just to give us a snapshot of what's going on in the PBSA sector at the moment. So the first story you can see on the left there, Greystar recently acquiring a PBSA site in Wembley from Quintain. There's quite a bit of transactional activity going on. The middle one's quite interesting. The building you can see there is a huge Premier Inn hotel in Bristol city centre, and Whitbread has teamed up with a development partner, and that building is actually going to be replaced with co-living and student conversion. So people are rethinking other assets and converting them to student. The story on the right there, in the US, the market's performing very well, but interestingly, investment volumes have fallen over there, which I suspect is not the case here in Europe. Again, some interesting conversions. An Italian university has bought a hotel to convert for its students, and this is a theme that's going to recur, that there is quite a serious shortage of stock for the number of students out there, and we're seeing quite a lot of institutional money coming into the sector now, and there are a couple of examples of that on those slides there. So the next slide is quite an interesting one. These are from other media outlets, and this is quite a good example of how various people have different opinions and different takes on the same situation. So the quote on the left there is from the Financial Times, from a recent article, "Student housing is the bubble that won't burst," but they've put in quite a positive spin on it. But you can see from the other screen grabs there is a real, this is quite a serious issue. There is a serious shortage of housing here. Universities are expanding, they're putting on more courses, and there just isn't enough accommodation to provide for the students out there. So when we're not just talking about PBSA here, you know, we're talking across the board. So it's a very timely subject that we're going to speak about today. So we will we'll get on and we'll crack on. So the session's been called Demand Outstripping Supply, and I'd like to start, James, by kicking off with you. I know there's no single answer, there's no simple answer to this, but why is supply failing to keep up with demand? What are the biggest challenges you're facing in acquiring land and delivering new PBSA accommodation?
You're definitely right in saying there's no simple answer here. I'd kind of narrow this down to three areas that we're really seeing challenge on. And number one, which everyone will be facing, especially as developers, is viability. Obviously, it's been well publicised that build costs went through the roof last year, and the economic turmoil that's occurred over the last, well, I guess since COVID, but especially the last 12 months. There's a lot of pressure being putting on the kind of the value side of the equation. Yields are moving out. There have been few transactions in the last year to actually prove pricing. The cost of debt's increasing, and that's harming delivery and harming valuations. I guess another area linked to inflation is energy pricing, and with PBSA typically being all-inclusive rents, that has to be passed on to someone, and that is hurting the economic efficiency of developments and reducing values there. I guess luckily there's been some strong rental growth over the last year, especially in big markets like London, which has offset some viability challenges. But from a developer perspective, it's certainly tricky. Planning is definitely another area which I guess creates a bottleneck in the delivery pipeline. We all know that planners are severely under-resourced. I think planning applications are down this year on where they've been as a trend for the last couple of years, which is no surprise. You know, it's something we face basically every day, and no one thinks it's ever going to be a smooth ride when taking a student planning application through the system. And I guess a final point, which could harm delivery in the long run in certain markets, which I've given less thought to, but I think definitely will be an issue, is the risk of flight to quality from developers and funders. In times of economic uncertainty, there's a clear demand for product in what we'd class as kind of upper tier Russell Group markets, and that does risk. There is a risk that kind of lower tier markets, I say that in brackets, will be left behind as developers and funders focus on those more secure markets.
Yeah, thanks, James. Some of the challenges you mentioned there, so the energy prices, the increase in build cost, the increase in the cost of development finance and so on, is that something you think is here to stay, or is that a relatively short-term blip or a medium-term problem? How are you viewing that?
I think on build costs, obviously it peaked last year. I think internally we were, I can't remember exactly what we were, but the market was 10 to 12% build cost inflation last year. That's definitely going to come down this year. But that prices never come down. Those costs will still remain 10-12% higher than they were last year, and they will grow again this year. So it is something we're having to factor in. It has been slightly offset, as I said, by high rental growth, but it's definitely put pressure on appraisals that it wasn't there before. We'd like to see, and we're expecting to see, some reduction in the land market to offset that, but that has yet to come through, if at all. So appraisals are challenged. Energy, we're hoping that energy prices do stabilize, and especially as looking at as we go forward, using more I guess less grid dependent energy resources to one, to make our schemes more environmentally friendly, but two, to have more certainty over cost, kind of using on-site renewables and stuff like that.
Yeah. Thanks, James. We'll move on to the ESG topic a bit later on, actually, because I think that's an interesting one. Craig, did you want to come in on that point?
Yeah, thank you, George. And I think one of the points James made there was the flight to quality, and certainly I think from a site location perspective, actually we're facing quite a lack of good location sites for development in the first place. I mean, the PBSA market is now pretty mature. We've been talking about doing this for 20 odd years. And actually, we're now on sort of generation 3, 4, 5 of PBSA assets. So a lot of the prime locations were actually taken in those earlier generations. And you've also now got the issue where a number of investors and developers are reluctant to take on either conversions of existing, say, office stock, or refurbishment of existing stock due to regulation issues, fire cladding, fire stopping issues, that things we're well aware of. So I think those things are also currently really squeezing the market for development. That's on the supply side. I think the other part of the question, of course, is why is supply failing to keep up with demand? We're talking about the supply not meeting up, but actually demand is getting ever increasingly more. So the popular universities, is post-Brexit, we've still proven that the UK is a great place that people want to come and study and get a degree from. The figures banded around by all the real estate agents are such that this growth is not going to slow down. If anything, it's going to speed up. The demographic curve is in our favour. Actually, at economic bad times, that the counter-cyclical nature of PBSA means people will be studying for longer, or more people will be studying. So the numbers are going to go up even if supply goes up with it.
Mm-hmm. Yeah, and when we were speaking quickly before the call started, Craig, you made an interesting point, which is that if there isn't enough PBSA inventory in a particular location, students are looking to build to rent for their accommodation instead. And as a company that manages different types of asset classes, is that a trend that you see growing? Are the delivery levels between build to rent and PBSA similar, or do you think build to rent is on a faster growth trajectory at the moment?
I think that's an interesting question. I think the simple reality of it is that students who, as according to your press release there on one of the context slides, who are otherwise going to be homeless, will look to secure accommodation in whatever form they can. Yeah. And certainly accommodation in the BTR or co-living sector rather than the specific PBSA sector is going to be more attractive than them having to commute to, say, Manchester from Liverpool, which we have been seeing. I think also we should remember that the HMO market makes up still the vast majority of student accommodation beds, but actually that's shrinking as well. So I think the current split is something like 65% for HMOs. But actually that relies a lot on older stock. We've all remember the sort of Victorian houses with students crammed in when we were at university, not particularly good quality, certainly not sort of professionally managed. The well-being and lifestyle expectation of student experience is pretty low. But actually landlords are falling out of the sector as well, due to the tax conditions, the regulatory conditions about EPC certificates and things like that. So that side of the supply pool is falling as well, and pushing students into whatever accommodation they can find. So whether that's BTR, co-living, student, or other,
Yeah, and on your point about rundown Victorian housing stock, I remember it well, as does Richard Mayuski, clearly, who's just put in the chat there, whatever happened to the young ones. Yeah, the student accommodation has come a long way.
we put on suits and we got jobs. This is us.
Yeah, but that was uncannily accurate, that program. Okay, so let's talk a bit about investment and finance, and I just want to stay with you for a moment, Craig, before opening up to the others. How strong? I mean, considering the supply-demand imbalance, presumably as investor sentiment towards PBSA is still very strong. How does it sit within the broader living sector? Do you think it is still, you know, we're starting to see a bit more institutional interest in co-living now? Build to rent is obviously very strong. Where do you see PBSA sitting within that group of living sector asset classes?
I think within the sector of the sort of alternative real estate asset class, PBSA is still the prime sector. You know, it's a mature sector. Clearly, we've just been talking about the absolutely key demand supply situation, which underpins the finances of all these PBSA schemes. That's not improving, it's getting worse. So fundamentally, there's a huge need for the product, and that's likely to stay the same over the long term. I think one of the advantages that PBSA has over some of the other residential sectors is that it's the counter-cyclical nature in terms of economic headwinds. So we tend to do fairly well when other markets are struggling, as more people either stay and study for longer or start studying when they were otherwise thinking of other job opportunities. I think also you've got the fact that what we do is partially at least an inflation hedge sector. You know, rent rises generally track inflation. Obviously, inflation has been very high recently. Passing on rents at that level isn't necessarily easy, but nonetheless, rents have risen, and in some locations they've risen really high in the last 12 months, 18 months. So that's offset a large amount of general cost increases, but also specific ones such as, you know, utilities that was mentioned earlier on. So I think there's a huge amount of positive financial and investor sentiment towards PBSA, and certainly the people I've been speaking to recently at various conferences and events have all been saying the same thing. Really, there's a lack of deals that are out there for them to fight over. Obviously, that's not that competitive nature is not helping investors. There aren't any bargains out there. Some things that I've been seeing, suggest that some people are still trying their arm a little bit, if you like, but actually, very few people are being forced to sell. So those bargains aren't really there at the moment. So I think picking up on another point that James raised earlier, just to finish my sort of thoughts on that, would be, again, the flight to quality. So investment sentiment is strong, but it is typically looking for the best micro locations, ones where they're supporting top, whether it's Russell Group or specialist other universities, ideally in a city with multiple high quality higher education institutions. They're looking for top quality buildings in terms of fire safety regulations, ESG perspective. They're looking for top amenities because they generate the highest rents. So I think not all PBSA will be attractive and benefit from that positive investment sentiment. Yeah,
great stuff. Thank you, Craig. James, does that tally more or less with your experience in terms of investor sentiment towards the sector?
Yeah, I definitely echo what Craig is saying. As a business, we're out in the market on both fronts. We're buying land to take through planning and develop schemes ourselves, but we also get our schemes forward funding. So we are always, we are definitely in the market at the moment, marketing our schemes, and we're finding that investor sentiment is strong. It's clearly a weird time in the market. It is tough. A lot of parties are more cautious with pricing, but that's just to be expected. But I think the good thing is, as Craig said, PBSA is over the last 20 years has proven itself to be a really strong performer. As Craig said, counter-cyclical, defensive income, really strong rental growth, and not forgetting that the money that's going on rents from students is typically either coming from the government or their parents. So it has proven itself, and it continues to be the strongest performer, or I guess has the largest demand pool in the alternative assets market.
Yeah, great stuff. Thank you, James. Mandisa, we saw from one of the slides that Greystar is not only developing PBSA assets, but is also acquiring them with the recent Wembley deal. But let's talk a bit about the actual physical product. So how are state-of-the-art PBSA assets evolving in terms of design and specification? If you at Greystar were sort of to sit down at the drawing board now on a new project, how would it differ from kind of previous iterations?
I mean, if I think about my time at Greystar, I joined in 2015 when we just joined the UK market in 2013. And there was a big race with student accommodation around amenity to get the best amenity, to put in the best amenity into your building amongst a lot of competitors. And, people are putting in gyms, study spaces, swimming pools, bowling alleys, all sorts of stuff. If you look at the trend now, I think that's really kind of slowed down, and people are still putting in good amenity spaces, but students are starting to think about more practical items, thinking about things like parcels and how they receive their parcels, and having the right spaces for the delivery of your parcels, and thinking about the back of house as well, and your staff members working in that building, that you can operate that building efficiently. Back in the days, you didn't have things like maintenance doors and cleaners cupboards, and buildings were being run on a shoestring. Amenity is still equally as important, but students are thinking about other things in their rooms. They spend a lot of time in their rooms. They're thinking about natural light, bigger rooms. There was a whole thing on LinkedIn a few months ago comparing old student accommodation digs with prisons around Europe, which I found quite funny. And people who are thinking about building the right buildings, the efficient buildings, are moving away from those little box dark rooms that we used to see in student accommodation. And that's what the students do value. So yeah, you are seeing a change, but a change in the right way, making the buildings a better place to live in. And also outdoor space as well is something that students are starting to look at a lot. Outdoor terraces where you can have a bit of greenery. But the things like gyms are still important for exercise. People thinking about their health now. So yeah, those are the trends that I've seen in the student sector over the last few years.
And is there a general move towards slightly larger unit sizes? We're seeing in co-living that there were some very, very small units in some of the initial buildings, but the average is gradually getting bigger. Is the same happening in PBSA?
I can definitely confirm. So for us as a business, not just in PBSA, but in our build to rent assets, we're thinking about the unit sizes that we deliver for our residents, because we've got to consider the well-being and the time that's spent in those spaces, and it's got to be comfortable for that person. The way I look at it, and I'm sure the business does as well, is would you want to spend time in that space? If you're saying no, then we probably shouldn't be building it. So yes, personally, we do.
Yeah, excellent. Thanks, Mandisa. Craig, did you want to come in on that at all?
Yeah, I think we're seeing similar. I wonder whether it's actually student expectations dropping, or whether it's actually more a case of expectations have met the product that's been offered for now a number of years. So, pretty much every brand new PBSA is going to have a gym. Not many of them have pools. We've got one in the portfolio, but a gym is really seen as standard. I think the really interesting thing for me, and fully support what Mandisa is saying, was that since COVID in particular, the well-being of the resident is really taking precedent. So it's no longer a case where you're seeing amenity space in the context of a single bedroom and then a large open plan space that might have a games room and a cinema room and a gym and all that sort of stuff sort of on the ground floor. What we're starting to see much more now is as Mandisa said, natural light, balconies, roof terraces, courtyards, outside space, things that bring in fresh air and light have become really important for students, many of whom can look back a couple of years and remember when they were basically locked in a box. So I think there's that to it. I think what we're also seeing is the need for flexible space that can be divided up into smaller amenity spaces. So study spaces these days in the current generation of PBSA is very different to how it was 5 years ago, and you have all sorts of ability to study on your own in a little booth, but actually study as 2 or 3 or in little groups or on a bigger stage. So that's definitely coming in, as is communal dining and kitchen space. So again, maybe something that they're learning from picking up from co-living. So you're not going to have a massive kitchen for 500 students with a space that everyone can sit down, but actually what we're starting to see a lot more of are slightly smaller spaces, small kitchenettes areas outside of the studio bedrooms themselves, but and different from the cluster flats as well. Things where you can bring in friends and family, book a room, and you can have a little party, whether it's a birthday party or celebration or something, but just to make it a bit more intimate than this sort of open plan nature, but a little bit more special than the sort of cluster kitchen at the end of the corridor. We're definitely seeing those sort of things now really grabbing students' attention and focus. But I have to say, after all that, gym, I believe, is still the number one amenity that's searched every time by prospective residents, no matter how many of percentage of them actually use it. And certainly I wouldn't have done.
No, I think today's students are a lot healthier and concerned with well-being than when I was a student. We actually had a show round of a development in Paris a couple of years ago called Eclat. I believe it's the largest PBSA development in Europe so far. It's run by a company called Uxco, which I think is owned by Brookfield. It's enormous, and the level of amenity there was incredible. They had a recording studio with a whole new suite of brand new instruments, so bass guitars, drum kit, the whole thing. A games room with the kind of vibrating chairs that the gamers use, and I was absolutely astonished. And consequently, their guest age range was from 17 to 70, so it wasn't a kind of narrow, typical university age student there. People were going back to study, and I'd have to say, having seen that place, I could understand why, because it was certainly couldn't be more different from some of the hovels that I used to live in when I was at university. It was a real eye-opener, actually, for me, that place.
I think it is a really important point, though. And you can have all the facilities you like, but actually a lot of them, I've seen many good amenity spaces not used very often. And so you also have the service side, and you have to manage the schemes sufficiently professionally well, get focus on the residents and the well-being and their student experience, such that actually they feel that they want to use those amenities, or that they can get the best out of those amenities. So I think there's, you have to provide the amenity in the first place. And these days, I think there's definitely a push for, flexible living. The number of cinema rooms that have beanbags, so you can push them to the wall and then use them as, yoga studios and things like that, rather than have separate buildings for them is incredible. But you've also got to manage it on that basis as well.
Yeah. There's a couple of interesting questions from Richard here, actually, which kind of pick up on this. One, his first one, he says, great to move away from hovels and beyond but it does worry me that it's restricting supply to affluent students. Is there student accommodation out there pitching at, a lower level of affordability? And a second question from Richard, which we can tackle together. Is the demand largely coming from Asia? What happens if government policy changes and makes it prohibitively expensive for overseas students to study in the UK? Mandisa, I see you've got your hand up. Did you want to jump in on that?
Yeah, I mean, just to answer Richard's question, if I look at us as a business, Greystar, we have two brands. We have the Canvas brands, we have the Chapter brand, and the Canvas brand is a premium brand, but it's still reasonably more affordable than the Chapter brand. And I look at all our other competitors that we work around with, and there's levels of student accommodation more affordable, and then there's more premium. So I feel there's still a lot of choice for students to choose from. And we also alluded to it earlier on that they don't necessarily have to live in the student accommodation sector either only. There is the co-living option, there is the build-to-rent option, there's the PRS option, and we do get students coming into our build-to-rent assets within Greystar where we do allow it. So I feel like, no, it's not a race. It's not, we're not preventing people by having this amenity, we're not preventing other people from being able to afford living in these, in student accommodation. Plus, we still also have university digs as well.
Yeah. So would you say, Mandisa, that as a rule of thumb, obviously there are going to be exceptions, but as a rule of thumb, would PBSA, in terms of price, sit between build to rent and co-living?
Definitely, yes, yeah. Definitely.
And would you know roughly what the difference between a PBSA rent, an all-inclusive PBSA rent, and somebody in an HMO in the same neighbourhood would be? I mean, I'm presuming there is a price premium there, but is it a big one? Do you know?
I don't want to make up figures. I will defer potentially to Craig and James. They might have the answer to that one. It's not operations, not my area in that sense.
Sure, Craig, have you got a hunch on that? I know. I mean, I don't know if the figures are out there, but
Funnily enough, I saw some figures put up on a screen at an event yesterday, and from memory, the difference between HMO and PBSA was roughly 10%.
Okay.
That's take that with a slight pinch of salt, but recalling some information from yesterday. But yeah, it's around that sort of level. I think we're talking about affordability. I think one thing you need to bear in mind is that actually it's value for money. That I think the PBSA sector really benchmarks itself against. As long as students think they're getting value for money, the actual affordability is slightly less important. And I think that's storing up a problem, and I harp on about it quite a lot. But you know, with the push for ever better ESG credentials and regulation, clearly positive steps in terms of bringing quality accommodation to the market and allowing young people to experience that. But I do think there's a danger that we're potentially storing up a sort of a very divided market. And I think some students, in particular, the evidence suggests it's domestic students, would be happy with safe and secure accommodation, but without the bells and whistles. As long as they feel that they've got a decent experience, they can make their own friends, they can go out and join local gyms, etc., etc. Much like the sort of HMO market offering, really, but professionally managed and safer and securer. I think there's a danger that sort of accommodation could get left behind and ultimately even taken out of the supply pool when regulations change. And I think that would be a real shame, because I think there is a demand for truly affordable, not value for money, but cheap accommodation. And quality still needs to be there. We can't get away with peddling non-standard substandard accommodation for cheap money. But I think over the years that gap is going to widen.
Yeah, interesting. I mean, a slight parallel, but if you look at how the hospitality sector is performing at the moment, it's the very top end, the luxury end, and the economy sector that are doing the best, because value for money is top of a lot of people's list at the moment. And I think this definitely applies to this market too.
We definitely see it year after year. The most expensive rooms go first, the cheapest rooms go second. It's that sort of middle band that are the ones that you really have to concentrate hard and get the marketing right, and tailor your messaging to specific audiences. So I think that reinforces the view you've just said.
Yeah. Craig, could you just quickly pick up on the second bit of Richard's question? I think it's very unlikely that the government will make it more difficult for overseas students to come here, because they're a very important contributor to the economy. But if that did happen, would that leave the sector in a tight spot?
I think it's interesting over time, the patterns of overseas students shifts. Obviously, since Brexit, we've had less European students, but that hasn't been seen as a big block. Obviously, we've had COVID in that period as well. And currently, yes, the Chinese and Asian market makes up a large percentage, but actually, the Indian market is now very established, and lots of Indian students come over to the UK. Countries from Africa, Nigeria in particular, starting to pick up as well in terms of numbers. So I think the fundamental value of a UK degree is actually seen still as being very strong globally, and I think there'll always be a demand for that. Interestingly, the Chinese education sector is growing faster than everywhere else, and lots of new university springing up there and demand, but actually we're not seeing that sort of translate yet into a tailing off of demand here, so irrespective of government regulations and desire. So, and I think as you rightly said, you can't you've got to be careful of not killing the golden goose, haven't you? So there's an awful lot of money that comes into cities of the UK from overseas students, and why would we want to curtail that?
Yeah, absolutely. Thanks, Craig. Okay, let's move on and talk about sustainability and ESG. Mandisa, how are these assets evolving in terms of environmental performance? How much more efficient are they than than they used to be, and why? What's going into them to make them so much more efficient?
I think the ESG agenda has really brought to the forefront the importance of getting efficiency from our buildings. And us as a business, like smart metering is something that we're starting to really look at and trying to pull the data of what is going on in our building around water, around electricity, around gas, and trying to get into granular detail of not just as a building as a whole, but on a floor by floor basis, on a room by room basis, what is actually going on? Is there anything that we can do to make this building work much more efficiently? We're looking at things like leak detection as well. A lot of water is wasted in this country in general, in the residential sector. And we're looking at smarter ways of how we can deal with leaks before they become a problem, where not only do they affect the experience of the residents and we have to decant them and put them somewhere else, but also the damage that happens to the building. We're also starting to residents want to get involved in this. The students of these days are definitely, I think it was Craig or James who said that they're much more aware in terms of health and exercise, etc. They're conscious about their health and they're conscious about the environment. We see a lot of the young people that are involved in the protests about the climate here. And they're starting to ask the questions about green buildings and like smarter buildings, efficient buildings, and what we're doing, how responsible are we? Then we have the responsibility to the investors who are also really starting to drill down and trying to understand. So as a business, especially after recently appointing a sustainability director, we are really starting to drill into our data and trying to understand what's going in our assets and what we can do to make our buildings behave more smarter and just increase their longevity. And we're also looking at things like digital twin, how we can use technology to make the building smarter as well.
I know a lot of the big real estate companies have set quite ambitious net zero carbon targets. Is Greystar one of those? Have you got a timeline for achieving operational net zero?
We are working on a timeline. It's going to be a realistic, achievable timeline because we think about how many assets we've got across the UK and actually Europe as well. And we've got a variation from very old assets to very new. And out of those assets, we're pulling different lots of data. And to bring that all together, we need to be realistic about our targets. And we are not going to be a business that's about planting trees and paying our way out of it. We actually want to do the right thing for our buildings, for our investors, and for the people living in them. So we're working on a target, but it's not something that I can share at the moment. This is something that's in progress over the next few months.
Yeah. Well, I mean, if you're going to set yourself a target, you have to be ambitious, but you also have to be realistic. And I'm not sure that everybody is being at the moment, but that's for another webinar. James, in terms of the environmental performance of these buildings, is it down to the envelope and construction techniques that's improving things rapidly, or is it the technology involved in monitoring what's actually going on?
Yeah, I think I'm kind of more afraid with I guess with the construction side, but it's definitely a mix of both. It's how do you build them. There's been a big focus on modular or part modular design and construction. I don't think we are as a business doing kind of fully modularized units yet, but we do kind of modular bathroom pods or precast panels for facades, and wherever you can kind of build off-site and get it onto site, you are reducing kind of material usage and material wastage, transport costs, and also reducing construction programs, which the less time you're on site, the quicker you can build a building, the better. Yeah. Another focus for us is refurbishment, and I think we will start to see a rise in refurbishment. The amount of embodied carbon in existing buildings, and it is a kind of an environmental shame if you just knock that down and build a new one. So it is something we are starting to look at, and it's something we're doing. We've got a project in Leeds at the moment where instead of knocking it down, we're actually refurbishing the existing office space, and I think that that will grow. as tenant and investor demands continue to kind of to demand more environmentally efficient and friendly schemes. And then I guess probably maybe something more Craig can focus on, but in terms of kind of apps and stuff for when operating the schemes, we are ensuring that rooms have individual metering, so tenants can see what they're using, and hopefully as that pops up, it makes you more aware as a tenant on what you're using and how to reduce energy.
Yeah, the reuse thing is interesting actually, because I think it's probably fair to say the vast majority of PBSA stock up till now has been new build, but it's interesting that you're now converting offices, and we saw a couple of examples on the slides earlier. Are there any particular types of existing assets that lend themselves better to a student accommodation conversion? I mean, I can see that a hotel might work, or an apartment block. What challenges are you finding with the office in particular?
We've definitely looked at converting. I don't think we have done yet. We've definitely looked at converting hotels in the past as the layout lends itself to student accommodation. I think I'm not a construction guy. I'm not a technical guy, but it definitely comes down to the individual building, and does the envelope allow you to remodel it and refurbish it in a way that a student wouldn't know it's a refurbished building. There's a risk that it would be perceived by students that a refurbished building might be a lower quality product. We definitely don't think it would be. You can create them in a way and design them in the way that it looks and feels like a new thing. So for us, the lead scheme, it lent itself to being a refurbishment. It was a very nice looking existing building, so it'd be a shame to knock it down.
Yeah, okay, thanks, James. Craig, picking up on one of James's points there, we have mentioned that PBSA tends to be an all-inclusive product in terms of bills. How important is tenant engagement and education in the use of energy? Because if you're not paying for the electricity, there's a temptation not to be quite so frugal with it. So
there is. Just before I come on to answer that specific question, I think it to my mind brings a slightly wider question, and in the context of ESG, and that is that it is all about the resident experience as well. And certainly we've seen examples where the move to putting greater insulation has been great from a sustainability point of view, but actually with large glass cluster kitchens have been in particular, in my experience, extremely hot and unpleasant places to be. And then retrofitting mechanical ventilation doesn't seem to me to be the right solution for either the resident or from an ESG perspective. So I think we shouldn't get too carried away with some of these initiatives without really analysing what the impact on the people that are living there is going to be. And in that context, I'm very encouraged to see much more use of things like Fitwell, Wired Score, things that make a practical difference to the people that live in the accommodation, being seen as part of the S in ESG as well. So I'm very much in favour of that. In terms of energy, you're absolutely right. Without the data, there is no options. So I think it's absolutely right. We've got an advisory service. So for new builds, we would certainly be advising people to put in monitoring equipment that enables you to go down to a room level, because it provides you with optionality. Doesn't mean everyone's going to suddenly jump to sort of fair usage schemes and things like that, but it certainly allows them to consider it. At the same time, having the data does allow us to much better educate and influence the residents that we look after in terms of their behaviour, because you're absolutely right. The classic story of open a door to show someone round, and there's not supposed to be anyone in there, but there always is, and it's always a guy in his boxer shorts with the heating full on and the window wide open. And actually, a lot of it is just sort of unthoughtfulness, to be honest. So actually presented with the facts and presented with real data and examples of what difference that behavior makes actually is often enough to change people's behavior. There's also quite a lot of evidence that just having a policy in place like fair usage, even if you don't implement it and enforce it, actually is a huge driver of behavioral change. So I think for us, one of the key USPs of us is to get to know the residents and let's say help them establish a home from home. And so if you develop those relationships, you can have those conversations. And when that's backed up by technology, and James mentioned, yes, we've got an app, so students can do all sorts of things on that, but they can certainly see what their energy usage is. Actually, you can then talk to them and say, well, if there was to be a fair usage policy, instead of waiting to the end of the year and then being hit by a big bill, you could actually talk them through the year and say, okay, well, actually, if you carry on the way you're going, you're going to have a bill at the end of the year. Is there something we can do or something we can consider together to try and reduce that usage? So I think there's a lot of willingness from the resident fraternity to be as sustainable as possible. There's not an awful lot of evidence still, I don't think, that suggests they're willing to pay more, specifically when asked with that start question, will you pay more for a greener building? I think that is changing, but I think it's still pretty early days. But actually, if you can change behavior and have a greener existence through behavioral changes, I think there's a lot of positive sentiment towards that from the students, and they will buy into it if you give it to them in the right way.
Yeah. There was quite an interesting study for recently. I think top of my head, I think Spike Global and a couple of others were involved in it, and it showed how just turning down the thermostat by a degree or two in a typical student unit, how the amount of money and the amount of emissions that would save over the year. It was quite interesting, actually. In fact, I'll dig it out and I'll put it in the chat at the end of the session. I'll find it because it might be of interest to people. Mandisa, what's happening in terms of technology, both guest facing and operational, and what's around the corner? Do you think what are the most significant innovations technology wise?
Well, just to support something that Craig was talking about in terms of the student, the boxer shorts and heating in full blast, had an interesting session today, this morning with Utopia, who are a platform for to collect data on what is going on your utilities, on occupancy, etc. And we've got a trial going on in one of our assets with them, and they've been collecting data for the past 2 weeks. And the interesting information that came out of there around heating being left on, windows being pulled open in the open position while heating is on. Sometimes the person's not there because we've got an occupancy sensor which sense whether they're in the room or not. And it's the figures that came out of that were quite interesting for such a small proportion of our building. When you multiplied it across the whole asset, the potential savings that we could make as a business were actually quite interesting. And this is the sort of stuff that we're starting to tap into. We've got a lot of trials going on in our buildings. We're working with a company called Smart Rent as well, where they're a smart app aggregator, where you've got smart access control, leak detection installed on that app. You can do concierge services on that app. You can do smart lighting, smart heating control as well. And we've been trialing that for a couple of months as well in that same building. And we've got a digital transformation director who's doing a lot of research about what's important for residents. And we're starting to pull that data out to understand what we need to focus on for that resident experience that Craig spoke about, but also at the same time, think about how to make our building efficient, and then also thinking about how to increase the lifespan of that asset for our investors. So there's a lot of information out there, a lot of platforms, and the best way we're doing it as a business is to trial stuff and then start to narrow it down to think about what we need as a business for our people living in our assets, for our people who own the buildings, and what we need to do to increase the lifespan of those assets, and using that to make a decision.
Yeah, great stuff. Thanks, Mandisa. I found that article about the study, by the way, and I've posted that in the chat for everyone to see. And actually, Utopia were one of the people involved in that study. But basically, the nub of it is that encouraging residents to make more sustainable decisions in their accommodation can help to reduce a building's carbon emissions by up to 35%, which is obviously a bit good for the planet and good for the bottom line as well. So it's the link to that story is now in the chat for everybody. Craig, I want to quickly ask you about this term flexible living that is being bandied about. In the PBSA context, I guess this means serving other customer groups in your assets when they're not being used by the students, so in vacation periods and that kind of thing. We definitely saw a lot of that going on over the pandemic. Is that a trend that's here to stay, or is that kind of on the decline as students are staying longer in the sort of modern PBSA assets?
I think there's always been that ability, and I don't see that's going away. I think the opportunity to earn revenue in the non-term time obviously is very appealing for investors, and in some specific markets like London can be extremely lucrative. I do know one example of an asset that generates £1 million net profit per summer to the owner. I think there are a number of challenges, though. One of them is planning. So quite a few schemes are limited so that they can only take student residents. And I think another one is logistics. So very few of these schemes have the physical, storage available for instance, the linen, etc. They also don't necessarily have the staff available within the sort of general normal budgets to organise summer business effectively or efficiently. So, what we're talking about really is more of a hotel service than a student service. So there are specialist providers out there that people use. We use them as well, such as Lavanda, Staykeepers, etc. Obviously, they take a cut of the profit, so reduce the financial benefit to the ultimate investors, but certainly that experience is there. I think one thing that we have consciously seen and had to address is how you get those cohorts to mix. So as I said before, we're trying to provide people with homes. There's a huge amount of virtual circle in terms of if people feel it's their home, they'll look after it better, they'll behave better, maintenance costs go down, they're more likely to rebook, etc., etc. Actually, if you ask a student who's quite happy in their space, can you just move out for the next 6 weeks, please, because we want to use your cluster flat for summer income, that doesn't go down particularly well. At the same time, if there's only one resident that's staying for a longer period of time and the other 5 or 6 or 7 have all left, then actually you can see that as a pretty redundant space that you could otherwise utilize. At the same time, you've got to be careful. Obviously, you've got different cohorts. If you are bringing people that aren't students in, how are they treating that asset? Why are they there? Are they there for just a week-long party or something like that? Are they going to disturb the residents? Because at the end of the day, ultimately, these are residents' homes, and you have to look after their interests first. So I think you are restricted slightly by planning, but when the opportunity arises, yes, it can be extremely lucrative. You have to be organised, and you have to think of the residents that actually call it their home. But within those parameters, yes, you can make a very successful business.
Yeah, and presumably the lease-up period in a student asset is very different from build to rent because of the kind of structure of the academic year. Does this flexible approach apply as much in the lease-up as it does in build to rent, or does it work in a different way?
I think it's slightly different way. I think, again, it's micro locations. So some locations will be much more desirable for summer than others. So, tourist destinations, the likes of Dublin, the South Coast, are probably going to be, very popular. And so actually the people also looking for, cheap holidays at a time where, schools are not in session, as it were. So I think that there are a number of people that will find those weeks very attractive and can tailor their destinations on that basis. But no, I think it's an interesting and certainly something that we manage across our portfolio. Some clients actually would rather not have the hassle, because you do tend to have more damage caused by non-resident cohorts, etc., etc. So, and also remember that this is the time where you tend to do maintenance and life cycle works on your asset, because you don't want to disturb again the main student term time. So some clients actively don't seek these sort of opportunities, but most of them do, and we manage them on their behalf.
Yeah, thanks, Craig. Okay, we've got some good questions coming in, so I want to try and get through a couple of these quickly before we wrap up. We've got one here from Vincenzo Occupinti. Thank you for your question, Vincenzo. I think Mandisa, will start with you on this one. Vincenzo asks a question about digital data. Is there any platform or service that allows you to benchmark the current performance of your asset in terms of occupancy and rent level versus a set of comparable competitors and/or the market?
There probably is a platform, yes. If I can tell you which one, no. The difficulty that we've got at the moment around data platforms, there's a lot out there at the moment. you almost have to spend some time and do some research to see what you're looking for as a business, and speak to those companies to see if you can tailor it towards what you're trying to achieve as a company. So you have to do the research and go out to events and meet people and talk about their platforms and potentially do trials in your building as well. And you'll probably start to get closer to an answer. I don't know if this person's asking because they're looking for one, but that's the best advice I can give. I don't want to be recommending a specific platform because it may not be suitable for that business.
Sure. Craig, Vincenzo has also added a supplementary question, which maybe you could jump in. In your opinion, how advanced is the revenue management ability of PBSA operators when compared to, for example, airlines and hotels' dynamic pricing?
I've not worked in an airline or hotel situation myself, but certainly dynamic pricing is something that has been talked about for a while, and to be honest, wasn't practiced hugely extensively up until fairly recently. But I would say the last couple of years it's really kicked in, and I think that is now the norm. I still think it's largely a manual process. We use platforms such as Student Crowd to get a lot of data from updated weekly so that we can see what rents are doing in any particular market. We also analyze that and compare it with our own marketing material. How fast are certain assets letting? Is that ahead of last year? Is that ahead of the client strategy? Some clients want earlier take up just for the certainty, and other clients want to leave it to the last minute so they can maximize revenue potentially. So I would say that generally it's a fairly manual process that relies on data platforms. I think going forwards, we'll be hoping that more products come out. We're actually developing an internal product because we don't see that there's one on the market that's robust and flexible enough for what we want to use it for, so we're doing it ourselves. But that's something that we're developing rather than in place at the moment. But I think yes, that certainly in times at the moment where rents are rising in certain locations extremely highly, I think you can generate a lot of revenue from that. Obviously, you still have to bear in mind the whole affordability issue and the longer term aspirations. If you're a client owner, then you might not want to suddenly just generate a huge amount of revenue in 1 year because of the impact it might have on future years. You might take a longer term view, but that's ultimately the sort of strategic decisions that our owners will make.
Excellent. Thanks very much, Craig. Thanks also to Mandisa and James for a really insightful and interesting hour, which has gone by in the blink of an eye. I can't believe it's 3 o'clock already. I'm just going to show a couple of slides quickly before we wrap up. As I mentioned earlier, we'll leave the session open for a couple of minutes so you can take any notes that you might want to from the chat. So the next Urban Living webinar is on June the 7th, and we will be looking at the later living and senior living market, which is described rather snappily there as the demographic perfect storm. The link to register for that session is in the chat. We also have a series of half-day live events called Urban Living Insights, and the next one is next week on the 18th of May, when we'll be looking at the serviced apartment market. If you'd like to get hold of some tickets for that, again, the link is in the chat. And if you are going to be up in Leeds next week at UK Reef, I'll be there. If you would like to meet up for a chat, then my contact details are there. Be good to hear about what you are doing in the living sector. And if you're interested in working with us at IHM, whether it's at our events or across any of our digital platforms, please get in touch with one of my colleagues there, Katie or Stephanie. You can see their details on screen and also in the chat. So thanks again to Mandisa, to Craig and to James for their insights and their time today. A really interesting session, I thought. Thank you all for watching. If you're on any of the social channels, you can see there, give us a follow and enjoy the rest of your day. Thanks very much, everybody. Bye-bye.